Hello YouTube, Commuter here. This video I'm gonna keep this video short, but I wanted to kind of give you guys some insight on what an 850 credit file looks like. So I mentioned in one of my videos that whenever I see a good credit file, some details on a good credit file that can either get fixed really quickly or has some elements to it that I think we can all kind of learn from, I'll share with you guys. So I did share with you guys in one of my other videos a credit file that I said, man, this credit file only needed a small tweak here and there to really get it up and ranking. So it's probably in the last video or the video before. So if you've not subscribed, make sure you do that so you can keep up with this. And the only reason I'm doing this is, like I've shared with you, I'm always looking at credit files just about every single day, and I've been doing that for the last 12 years, 12 years or so. So I saw this credit file, and this file actually had a score of over 850. Now I noticed in looking at it in a little bit more detail, I noticed that on the Equifax, now these are auto scores. So as you know, on your FICO you have there's a ton of FICO scores out there. From the original FICO, there's FICO 2, 3, 4, all the way up to 9 now. The last version 9 was released in 2014. And for each version of FICO, there's a FICO auto, there's a FICO mortgage, there's a FICO bank rate, and sometimes I've noticed there's more than one bank rate. So out of each version of FICO within itself, there's at least 4 to 5 maybe different modules depending on the industry. So again, this was an auto score. So I noticed that for the Equifax auto score, it generated the FICO 9. Now, for those of you who are not aware, the FICO 9, like I said, the FICO 9 has been out since 2014. A lot of a lot of financial institutions have not yet really jumped on board yet. So for the most part, most of these bureaus would provide us with like a FICO 8. But I noticed that Equifax provided us with a FICO 9 auto, and this score was 10 to 15 points above the 850. So I found that interesting, number one. And then for the TransUnion and the Experian, they still use the other modules. They use a FICO 2 and a FICO 4 auto, and those were still over 8, but they're under 850. So I'm still kind of trying to figure out, since FICO 9 is probably beginning to roll out and certain financial institutions are beginning to adapt to it, we're probably going to see a lot more of FICO 9. So I've been researching on it. I'm finding out some stuff on it on FICO 9. So I will do a video specifically on FICO 9, because some of the things that I see about the FICO 9, they do score certain things a little bit better. They're a little more lenient on some other things, meaning that there's potential that we could see ourselves getting higher scores. So anyway, when I analyze this credit file, I noticed that this individual it seems that this individual has had a deliberate game plan of building credit, because they had a lot of credit files. First of all, they had a lot of trade lines, and as we're told by all the credit experts, that most 800 plus 850 credit profiles have anywhere from 10 to 15 to 20, over 20 trade lines, and this individual definitely had that. This individual had anywhere from paid off auto loans, mortgage, and an equity line of credit on their mortgage. And what I also noticed that they had a decent amount of credit cards. So they had a decent amount of credit cards on there. I think they had about four to five, at least 4 open credit cards. About at least 4 or so open credit cards. But they had credit cards in the past that they had at least, I think they had about 2 or 3 closed accounts. Now we're told that don't close your accounts, but this individual, I guess because they were so high up in the credit, it didn't really affect them. But they had a few closed credit card accounts and a few closed store cards. But they had a decent amount of they had a lot of open credit cards, like 3 or 4 open credit cards, another 3 or 4 open, about 2 or so open store cards, like a Macy's card, and a Nordstrom card, and those high-end stores. They had about 2 or so open, but they had a decent amount of open credit cards. Now, what I noticed is that this particular individual, all their credit cards were at 0 balance. All their credit cards had 0 balance. They had a couple high limit credit cards. We're talking 15,000, 10,000, 5. They didn't have anything over 20, but they had a couple of them that were over 10, and a couple of other ones that were between 5 and 7, and they had one or 2 small limit ones too, like a $2,500 a card or so. All of them were 0 balance. Now that does not mean to say that they didn't utilize those cards during the month, but they made sure that so either they didn't utilize. So 2 things: either they didn't utilize them through the month, maybe they're at the point where they just don't use credit cards, but most likely they use the cards, but pay them off and make sure that at reporting date those credit cards are showing 0 balance. So it's important that if you're going to play in the credit game and use, like I've said before, if you use credit cards to build your credit, then you have to do what this individual is most likely doing, making sure that your cards are at 0 balance at the time of reporting. Meaning that if you have to be aware with each card that you have to be aware of 3 dates, really. You have to be aware of 3 dates. Call the credit card company and ask them these 3 dates. One, the payment due date, which is usually within your credit card profile. Like when I log into my credit card on my app, it shows me what my due date is. So due date is easy to find out. Just log into the app, boom, it'll tell you what the due date is. But you would have to call them. I called my bank, my credit card company. You have to call them and ask them, when is the statement date? So ask them what the statement date is and ask them what the reporting date is. So the statement date is usually sometimes your due date, but not really. Sometimes it is, but sometimes it could be a day after your due date. So you want to know what your statement date is, meaning that the date that they close out for the month, and say that this is the balance that we are going to report to the CRAs, to the credit reporting agencies. You want to know that. You want to know the statement date, this date that the statement gets generated, and you want to know the reporting date. Now the reporting date is usually 3 to 4 days after the statement date. So they close out the statements, and 3 to 4 days later they report to the CRAs, the credit reporting agencies. So you want to know those 2 dates because you want to play around. You want to make sure that you are paid up by the time that balance is being reported to the CRAs. All right. So a nice rule of thumb is to make your payment 5 days before your due date, and don't use your card to 5 days after, so you can have that 10-day window, so that there are no mishaps, there are no any confusion. So anyway, I digress. But this individual had, like I said, about 5 to 6 credit cards, I believe it was, that were all zero balance at reporting date. So at the time that their credit file was being looked at, they only had it only showed that they had a loan balance on a vehicle. So they had an auto loan balance, and they had a mortgage, So really only 2 things on their credit. They had an installment loan, which is the mortgage, or rather 2 installment loans, because the other revolving accounts were showing zero balance. Now, of course, with installment loans, you're always going to have a balance until it's paid off. So, guys, just wanted to share with you what an 800 credit looks like. Zero balances on installment loans. No, I'm sorry. Zero balances on revolving accounts, and only balances that were showing were in installment loans. Now, so the jury is still out on whether you should leave a small balance on your credit card accounts for the sake of building credit, because there's two schools of thought that there's a school of thought that says pay off all your credit card balances at the end of every month. Use whatever you want. If it's a $10,000 limit credit card, spend $5,000 of it. Spend whatever, but pay it off at every month at reporting date, so it reports zero. But there's another school of thought that says that make sure that you only get reported, your balance only gets reported with a very low utilization, anywhere from 1% to 2% to 3%, under 7%, or it's different schools of thought. Some will tell you anywhere from 3 to 10%, or keep it under 5%, whatever. But or you rotate the utilization, 2% this month, 3% the next month, 5% the next month, so it fluctuates. So it shows that you are using your card. So like I said, the jury is still out on that. So what I'm doing with my credit card, I'm just kind of I want to see which model is best, whether to keep a balance on it or pay it off. So what I did is, on my last cycle on my credit card, I had a balance. And this cycle I paid it all off. So I want to see what the difference is. But what I did notice is that I had the month that this past period when I paid it off and had a zero balance at reporting date, I saw a movement in my FICO. It was a 15 point movement. So I'll see what happens next month. Again, I'll keep playing around with it and see which method probably benefits me the most. I don't know, but I'll probably just be keeping a zero balance, or maybe keep it at under 3% maybe. So I'll probably rotate it between 3% and 0%, and I'm sorry, keep it rotated between 3% balance or do a zero. Again, do a zero balance, and just kind of see how that looks like from month to month, and I'll come up with what I think works for me. So each one of us has to kind of come up with what works for them. So again, just want to share with you guys what an 850 credit file looks like, and perhaps give you an idea of what you can model as you are in credit repair and going beyond credit repair, so you can get into those high limits, get into those high 800s, so you can get those free travel miles, free hotels, lowest rates on on auto loans, lowest rates on mortgages, get that equal line of credit, just kind of leverage credit as a debt weapon to kind of even create wealth. That's what some of the things that we can talk about in any future videos. So if you're not subscribed, go ahead and hit that subscribe button, hit that like button, and leave me any comments in the section below. That's it for now, guys. Till next time, peace.